Financial expert Larry Glazer says that's because even if the Federal Reserve were to hike interest rates, it would likely be by a quarter point. It doesn't necessarily mean it's going to be a string of rate hikes, and it doesn't necessarily mean it's the end of the world. But, you know, if you think about what's going on, Larry, that's the fear, that we've gotten spoiled for almost a decade now of rates at a constant near zero, and we don't want to see it move up because the fear is once they start, they don't stop moving up. What do you say?
Sure. No, look, it's certainly not the end of the world. And anticipating the Fed's policy change has almost become an obsession for investors. In fact, on Wall Street, it's practically the national pastime. I mean, it's bigger than fantasy football. People saying, will they raise? Won't they raise? By how much? When will they do it? Look, the reality is when the Fed eventually does raise, it's probably going to be a welcome sigh of relief just to get this uncertainty behind us so we can focus on the real economy, what really matters to most people. And in fact, many areas of the economy and many consumers actually benefit from this change in Fed policy. So it can be a good thing for many people.
Do you think a rate hike is wise? Do you think now we should do it? You know, the World Bank has says don't even do it. Please don't do it.
Sure.
Christine Lagarde, I love doing that because I can do the French accent, Belgian accent, whatever she is. She has said, please don't do it. Now's not the time to do it. Is it?
Well, certainly the window's been open, and the Fed should take some action just to retain credibility, but also to benefit the many retirees in this country who've been earning zero on their savings rate. Why should they be penalized for events beyond their control? Neil, a strong dollar benefits from higher interest rates, keeps gas prices low. Again, benefiting the consumers ahead of the holiday shopping season, benefiting the businesses that transport things. There's lots of good things. How about your small local bank that's been penalized by this low interest rate policy? They benefit from higher rates. They can lend money. They can help the community. Even businesses, they've been doing financial engineering because of low interest rates. It will cause those businesses to change their policy. Forget the financial engineering. They'll have to invest, grow their business, hire, take risks, do things that help the middle class. So there are many benefits that we don't want to lose sight of, and we can't get too obsessed with the monster in the closet, which might be 0.25% interest rate increase.
All right, now, the other question is if they don't. In other words, your views notwithstanding,
sure,
and we go through next week without a rate hike, we go through October, November, December without a rate hike. The Fed has already telegraphed, if not blatantly drawn a proverbial line in the sand, it's going to happen and we're going to do it. If they don't, wouldn't the markets panic on that?
Sure. Well, it sends a bad signal to the market. And the volatility we've been seeing recently is in part due to China, and it's in part due to overseas concerns, but it's also in part due to uncertainty related to the Fed policy.
Gotcha.
And again, investors don't like uncertainty. So I think volatility will continue until the Fed takes action, and there's some clarity and there's some confidence, and people can look at the Fed policy and say, gee, they're saying the economy's better. They have confidence in the economy to make this small adjustment. We're no longer in emergency level interest rates, which is where we are today. And in fact, I think that would be a boost of confidence that we'd all benefit from.
All right, Larry, thank you very, very much. In other words, Larry is so good at this, essentially saying the Fed is damned if it does, damned if it doesn't, which is amazing.